Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and we are getting started late today. I had to do a complete reboot. I had so many windows open. I don't know if it was Google or the fact that the internet is slowed down some with everybody working from home, but it is 5 a.m. I don't know how many people are on right now, clogging up the bandwidth. So let's get to this. I named this Silver New Highs. It's actually a title from yesterday, which I need to change. I'm actually looking for news out of Washington. Not that it means all that much, because I worry about a sell on the news event if and when they ever do decide to pass a bill. And there's not much going on. Let's get to the charts. All right, so the E-minis this morning, we'll go to a 4-hour chart as usual. They are moving up higher, about 2.25%. Good morning, Lau. Good morning, TA. They're moving up higher this morning, over 2%. So we're going to at least attempt yet again to put another effort into putting back-to-back up days. The last time we had back-to-back up days on, at least the Dow Jones, the last I looked, was going back to February the 6th, back-to-back up days. And I had to reboot. All my stored ones are gone. Oh, no, here they are. Good. Okay. Oh, no, this is not them. It's not my stored. I'm a little bit disheveled this morning, folks. I didn't expect to have to reboot. Taking a look at gold. Gold after hours last night soared to new intraday highs. Right here. And then sold off. No great shock. We did break support. Let's see if we form a base here from which to consolidate. Good morning, Eric. Yeah, Eric, I got your email. I replied back last night. At around, I guess, 8:30, around there. Good morning, Cap. I'll check to make sure that it's not stuck in my outbox, but I definitely did reply back. I'll check for you. Because I use Gmail, and what may have happened is I was in One ID, and if I press, I can type an email, but if I press send, it won't send it because I'm stuck in another ID, and it goes to an outbox. So long story short, I'll check for you. All right, so gold this morning is down 0.75 percentage point. So we had a reversal overnight. No great shock. We had a beautiful bull run here. I do expect it to continue. One of the problems with gold, let me see if I can bring it up here, is the gold VIX, which remains elevated. When you have a reading above 31 on the gold VIX, you get, as you might expect, volatility on gold, and we remain above 40 right now. We appear to be weakening up a little bit. Yesterday we did head down to a low of 30.76. Then we bounced right back. So just below that 31 mark. And once we begin to drop down below 31, once we begin to put in lower highs and lower lows and close down below 31, at least on a 4-hour basis, you'll begin to see a more orderly rally up higher in gold. But right now, you're going to see a lot of backing and filling. Good morning, Cherry. taking a look. Again, my apologies, folks. I had to reboot everything, and I lost all my stored symbols. All right, the dollar. This is so critical for our trades in gold, silver, and that is a weakening U.S. dollar. And the U.S. dollar, I'll tell you, is like the Michael Myers of currencies. It will not die. Not that I wanted to. I'm an American, but I'm talking from a trader's perspective. And it is holding support here and still very much of a threat. Because if you take a look at the dollar from a longer term perspective, it is still very much of a threat of a breakout. We have already broken out above this upper band. This is a quarterly chart, mind you. We have already broken out above the upper band of resistance, this triangle formation, on a quarterly basis. Only a few days left in this quarter, not to mention the month. We were flirting with the highs of October 2016. I'll tell you, if we close above 103.82, the dollar's going a lot higher. At current, it is already broken out above resistance. A close above 100 will have the dollar, in all probability, next quarter, next month, pulling back, doing a retest of the 100 mark, and then pushing up higher. That will not bode well for U.S. exporters. Not to mention emerging markets will get clubbed over the head. So beware here. It'll be good for inflationary pressures. Just beware. So that's the dollar. Let's see what currencies may be doing well. Euro rallied, higher lows, but can't break out to new higher highs. Nothing awesome there. Where's the yen? Now the yen did break out above resistance. The second largest currency in the Dixie basket behind the euro. So if you get the euro going and the yen going, that is bearish for the U.S. dollar. So we're seeing good trends here. Good consolidation on the yen. We've broken out. We're pulling back and retesting. Now we need to see a breakout, and we really need to see the euro follow suit as well. But the euro is a complete basket case. They're getting hit harder with the coronavirus than we are. And certainly worse than the Japanese. And I really don't want to fall into this trap of blaming all this on, I got to be careful with saying that word too much, I'll call it the virus, because YouTube has deemed it not to be family friendly. Bitcoin. Bitcoin is showing strength. We've broken out overnight. Still very speculative. I prefer gold. Taking a look at oil. U.S. dollar, Japanese yen is so strong. Is there a strong correlation with S&P 500? Let's check it out. we'll compare it to the FXY. We'll do it on a we'll bring up the correlation tab as well as an overlay. Okay. No, I wouldn't say there's a huge correlation here. In fact, I would say the opposite. I would say that there's an inverse correlation. You can see how the yen was very, very weak. And the S&P continued higher. At current, we're seeing somewhat of a correlation in that we're down for, this is a quarterly chart, we're down for the quarter, obviously. We're also down on the quarter for yen. I guess in recent quarters, we're seeing far more of a correlation than in the past. And you can see that this is the correlation curve, and we are moving up higher. So the trend is in the upward direction. So to answer your question, it looks as though historically, no. We've seen an inverse, but that's changing at current. Let's drill down. Let's go to a weekly. Yeah, for quite some time, you saw a negative correlation. We would visit a positive correlation for a while and then roll over. Daily chart. A wee bit of a correlation. I mean, we weren't up yesterday on the yen. This is really looking under a microscope now. We were down yesterday on the yen, up yesterday on the S&P 500. So there's one that's beginning to build. Who knows how long it's going to last for? Yeah, the FXY is the Japanese yen trust. Going back. We already did this. Let's take a look at silver. We're long of silver, and we bought it right when the gold-silver ratio was at around 122. And we are holding gains. We're up another 2.13% this morning, and now consolidating. And this is what I want to see. A nice consolidation, setting the stage for a continuation move higher. And I was mentioned last night to members, silver is one of the harder metals or charts to track because it's so volatile. RL, will we retest lows again? I'm assuming on the overall stock market. In all probability, yes. Does that mean that we are going to break to new lower lows? I don't know. I'm not that smart, but given history and taking a look at prior bubbles, the probability of a new break to a new low is very strong. So to think that simply by virtue of the fact, let's bring up the S&P 500. Simply to assume that when they pass this legislation, and they will pass it, and it's going to be ridiculous, there's going to be a huge number on it, to think that this nightmare that we find ourselves in now, and they're going to blame it on the virus. It's not the virus. It's the credit. It's the debt. When you see big companies like GM, Boeing, drawing down their revolving lines of credit and cutting dividends, I mean, scary stuff. Very, very scary stuff. And they can't, and most companies can't issue guidance right now. So when you take a look, going back into history, this is what I tend to do. And a lot of the Elliott Wave guys out there, they do the same thing, although I'm not an Elliott Wave guy. I'm not knocking it. But I believe that history can give us a clue as to what the future may bring. And I mentioned over the weekend that what we're probably seeing is reminiscent of 2008 in that we were very oversold relative to the forget the 2 standard. The 3 standard deviation Bollinger Band. That's the wrong bandwidth. Sorry. This is embarrassing. Sorry, folks. I chose the wrong ones. It was a little bit early. And what I think is setting up here is very similar. We have an alleviation at current of an overbought condition on the market. There we go. So we closed out last week down below the 3rd standard deviation Bollinger Band on a monthly basis. We did the same back here in October of 2008. On October the 3rd, 2008, we saw President Bush, sign the TARP and all that legislation that pumped all that money into the financial system, basically bailed out the banks. And what happened after that? 5.5 months more of selling. So to think that they're going to pass this legislation and this market is going to go skyrocketing back up to new highs is frankly amateurish. This is a broken market. It's broken. People, and this is what I've been professing to members, people need to begin to take their monitors, if they're not used to shorting, turn them upside down if they're not comfortable shorting, because this is a market where we're going to be looking to short into resistance levels and ride the way back down, because in all probability what we're going to see, especially if we fail to close out the month above 2,500, we are going to break to new lows in the subsequent months. We're going to have ruthless counter trend rallies, just like we saw yesterday on the S&P 500. On the Dow, we had the biggest up day since 1933. That's not necessarily a good thing. It just means that there's a ton of volatility in the market. And at some point in time, we're going to reach a level, whether it be the declining 20 period or whether it be a resistance level at 2650, a combination of both. And you're going to see this market stall out. You're going to see liquidity concerns come back into the picture, and people are going to see an opportunity, or institutions are going to see an opportunity to sell, and they are going to sell. Good morning, Sam. How goes things with you? I did watch that the video about that little small town. I don't want to bastardize the name. Germano? Very sad. Poor lady was crying her eyes out on it. They interviewed. For the benefit of those that don't know what the heck I'm talking about, Sam who's in our chat, is from northern Italy and very much in the thick of things. Taking a look at the NASDAQ. Okay, you put in the cut. Volume was light yesterday and VIX leveled out. So that's a very good point. Yeah, so let's bring that up. The VIX, and this is what I mean. You need to, the market sends us signals. All we need to do is look. We were in a triangle formation. I drew this the night before last, these lines. What happened yesterday? We dropped all the way down to a low of 36.24. What did we do? We rallied back, bullish key reversal on the VIX, closing at the highs of the day. That is not necessarily price action I want to see where I long of this market. And we did book profits. We took some cash off the table yesterday on our trade of ELY, which is Callaway Golf. I bought this way down here with RSI with a 5 handle. And we didn't get out at the highs of the day yesterday, but very nice trade. Low risk, high reward. And what we did is we looked for historical support to get hit. That was all the way down here. And the last time we saw that was back here in November of 2011. And look at this bottoming tail. Very nice, if I do say so myself. Sam, no Bob. Bergamo, that's it. I'm sorry. We have 1,800. Oh my God. Very sorry. My goodness. So 1,800 people under 30 years old living in that small town with pulmonite. That's, I guess, the virus. I haven't heard pulmonite before yet. So forgive my ignorance. Well, very sorry, Sam. We're seeing more and more here as well. I see. Oh, I see. It's like perhaps like a scarring. I know this has an impact on the lungs. Maybe it's like a scarring. All right, so back to the VIX. Beware, folks. Be very, very aware. The VIX is telling us a story. And while we're seeing at current S&P futures, I would love to be the guy that comes on here every morning blowing sunshine up you know what. I'm not going to do that. And we are at resistance. Right here. So, it's been well over a month since we put in back-to-back up days, at least on the Dow. So the probabilities are fairly strong that we will probably see an up day, back-to-back up days at some point in time this week or next. But keep in mind that VIX, as you're seeing your shares of stock move into resistance levels or declining moving average, when you see declining moving average in a bear market, and have no doubt we are in a bear market, expect to see some selling into that moving average because it is going to be a declining ceiling on the shares. And that'll change. Once we pull back, we put in higher lows, those moving averages flatten out, then they become far more achievable to overcome. But when they're in steep declines, you have to assume there's going to be sellers there. I'm not seeing a hanging man formation on that VIX. This is a bullish reversal bar, unless you're looking at a different chart than I am. This is yesterday's close. A hanging man would be more if this was a black filled candlestick. Or perhaps if we were unable to close positive, we just barely we closed slightly negative. We just couldn't eke out a positive day. That I would perceive more as being a hanging man. Let's take a look. Do you have that symbol? I had it up here last night. I don't want to waste everybody's time here, me looking for this. But I'm pretty confident looking at stock charts of what I'm seeing there, and that's a bullish reversal bar. You know, listen, it comes down to this. We can call it cupcakes, right? What matters is this, is that do we hold this lower band of support? We could argue about labels, but do we hold this lower band of support? If it fails, then it doesn't matter what we call it, right? It's failed. And I'll be honest with you, we've broken down below the lower band of support on RSI. So we are continuing to lose momentum. But this price action trumps indicators. So if we put it in a new daily high, then this is a confirmed candlestick. It's bullish. If we fail to hold the support level, well, then it was a head fake, and we'll probably see the VIX come off a little bit further. I don't think we can get intraday analysis here. We'll try it. Yeah, we can. Yeah, strong close yesterday. So to make it really short term, now if we break down below yesterday's lows at 52.17, in all probability, we're going to go considerably lower. But right now, I can only trade the market that is in front of me. And the VIX showed strength yesterday. And we're seeing the S&Ps stall out here a little bit at the 2489 mark. Platinum and palladium had really good days yesterday, and they continue to shine here. And these are industrial metals. That's platinum, palladium, really good, really, really good. We're up nearly 7.5% this morning on palladium. All right, I'll take somebody asked for Amazon. I need to go over UTSL for one of our members. This is a hanging man formation. Right here. Me personally, what I would be concerned about with Amazon is they're the go-to right now for people who are staying home, getting locked in, not going to the stores. But the problem with Amazon is that their inventories are going to become under pressure because manufacturing over in China has ground to a halt. It's picking up now, but the supply chain disruption, I can't imagine not impacting Amazon in some form or fashion. But looking at the technicals, you want to argue that we broke out yesterday? That's fine. If we break back down below the support level, beware. Be very, very aware. Volume was good yesterday. Now, if we dance around on top of the support level, hold it, do a retest, and we break out above yesterday's highs at 1955, well, then there's probably more fuel in the tank. We could rally up to 1996. But I would be careful here. I think what we're seeing is, in all probability, a dead cat bounce. Here's a weekly chart. We're approaching the highs of last week. And that in and of itself is going to act as resistance. I'm not saying we can't move up higher here, but we've come a long way really, really fast. So just be careful. USLV, I need to go over. All right, USLV, we're long of. And this is another request. This is a leveraged ETF. If you don't want the volatility, simply use the SLV. Now, what's probably going to happen here in the short term is that we're going to rally up to fill the gap at 43.54. Then ideally, we'll pull back, put in a higher low, and then rally up and into $55 per share. This is, again, a weekly chart if I didn't say that. Daily chart. Oh, this is a monthly chart, sorry. Mislabeled. I have to delete this chart. I keep doing that. The ideal situation is that we close out the month above, at a bare minimum, this resistance level here at, let's call it, I don't know, $53 a share. For an ideal scenario, above $54 per share. This is a monthly chart again. And that would be very, very bullish. We'd probably do a retest of support next month, and then we get a move higher. Remember that 25% of the silver mining capacity is offline, and there is no physical silver out there for purchase. So demand is high, production is low. Daily chart. When you use a daily chart of silver, it's you can use the SLV and this is the leverage ETF. They're both very very volatile and very hard to predict. Uh, so it's bullish until it's not. It's like it's trying to chart the VIX. Silver's extremely volatile. So if we move up higher, I'm not going to be the least bit shocked. If we pull back, I'm not going to be the least bit shocked. We've come a long way very, very quickly. We've nearly doubled in the past couple of trading days on the USLV. And same thing with SLV. It's very, very volatile. Look at this. Beautiful price action. Longer term, I think they're going both a lot higher. NASDAQ appears weak lately, maybe not. We went over this last night a little bit. All right. So, what I don't like about the NASDAQ is that we couldn't close above 74.25. It's been acting as resistance. Where did we close yesterday? 74.17. So despite the fact we had a massive up day, we stalled right at resistance. So I don't really care about the percentage move. The headline is that you have the biggest up day since 1933 on the Dow Jones Industrial Average. So what? Who cares? We were oversold. To think that we weren't going to rally is amateurish. The fact of the matter is that we did not close above serious resistance. And that's all I really care about. I want to see a close above resistance. I want to see a pullback and a retest. And then I want to see a resumption of the move higher. And good luck with us trying to get through if we ever do get up this high, which we could quite possibly do, get up to 7,700. There's a ton of sellers up there. And this is all high beta. And beta does not work in recession. This is all tech, banks, regional banks. And you do not want to be in the regional banks right now. So be very, very careful with NASDAQ. Yeah, I saw that. India's locked down. Yep. Taking 4 weeks to get prime orders. Wow. It's also very crazy. But what we're looking at, our strategy here, and I went over this last night with members, is that, obviously the tone of my voice is not a bullish one. We're looking at history. We're looking at the cards that we've been dealt here. And for those that are thinking that it's the Federal Reserve to the rescue, the Federal Reserve caused this. As Peter Schiff would say, we've had a massive debt bubble, and the virus is simply the pin that pricked that bubble. And you could argue that the air was coming out since September when the Federal Reserve had to go into the repo market. So I would argue that it was already pricked, and the air was coming out slightly, but then the virus really, along with the Russians walking out of the OPEC meeting, really sealed the deal. And we are in a bear market. So we're looking to short the market. We have some positions that we have been profitable on, are profitable on. We're going to look to take those positions off and look to lean into the short side when the market sends us a signal. And I hope they spike it up higher. And we'll look to short the market. We're also going to be looking at, and this assumes that the dollar breaks, we'll be looking at Vietnam, which popped yesterday. We'll be looking at Malaysia. Where is it? Here it is. Malaysia, which is popping right now. It's probably going to pull back here. These are going to be the beneficiaries of what I expect. After this is all said and done, after the crisis is over, and we have a Congress that is not focused on emergency measures and is less focused on infighting. And they're going to be looking for the bogeyman. And look no further than the Chinese Communist Party. And you're going to see manufacturing, especially with medical supplies, anything that's deemed to be essential to the war effort. You're going to see that manufacturing get curtailed dramatically out of China. I doubt that it's going to come home 100% or even 50%, but the beneficiaries are going to be Malaysia. They're going to be low-cost providers, Vietnam, India. Those are the sectors, or those are the regions that we're going to be looking for as a long-term investment. And China, I think that they have a lot of problems on their hands. So, and they're just beginning. So with that, folks, I'm going to say everybody have a profitable trading day. If you can hit that like button, I'd really appreciate it. And I will talk to you soon. Be well.